oil. But, you know, it could just be China. I'm just playing devil's advocate here to conspiracy theories, because a lot of people say this is like a direct challenge. And I think it is a challenge. It will ultimately be perhaps they get the exorbitant privilege one day in a world of fiat. But here it could just be a practical thing of how to, you know, how to make your currency part of not only the SDR, the IMF special drawing rights, but also a global reserve currency.
Well, why does China need dollars? And why do they sell stuff to the U.S. for dollars, like into Walmart? Because without dollars, they are incapable of participating in the global economy since it's all priced in dollars. So to escape the yoke of being colonized by a dollar-based economy, they would seek to escape, possibly through the yuan petrodollar contract as an expression of economic freedom. So this is something that we see in other countries. Russia, for example, is coming up with an alternative to the SWIFT money transfer system. They don't want to be colonized by the American dollar SWIFT system. They wanted their own system. So all of these countries that are emerging now and multi-trillion-dollar competitors to the U.S. economy need to figure out the dollar question, or they will remain a colony of the U.S.
Well, one thing, of course, that also happened is when Trump was threatening all sorts of tariffs on steel and then intellectual property, $6 billion worth of trade tariffs on there, is that, one, there are many people in the Communist Party of China, and one official did say, oh, we might not buy any more U.S. treasuries. They didn't threaten to dump them, but every single financial and economic analyst on earth said, of course, China is kind of stuck in a quagmire because they hold so many U.S. dollar treasury bonds, and what are they going to do? They're just going to ruin their own position. So this is also a way to not have to accumulate even more U.S. dollars on their books, because they need to diversify their portfolio, because they're right now, you know, they're not diversified. There's
no, but they're willfully giving up this symbiotic relationship that people thought was unimpeachable and unbreakable between these two. But China is signaling that maybe it is breakable, that maybe they will attempt to go it alone.
So let's look at some of the risks that Reuters says the people are concerned about. And I'm just going to pick up on one matter that you are a specialist on, because it's about market making and market structure and price discovery and things like this. And one of the issues they point out that people are concerned about is that the Shanghai International Energy Exchange, the unit of the Shanghai Futures Exchange running the contract, has strict daily limits on the number of canceled orders allowed per account, aimed at curbing spoofing. This involves placing bids to buy or offers to sell futures contracts with the intent to cancel them before execution. By creating an illusion of demand, spoofers can influence prices to benefit their market positions. For a larger client placing orders of more than 300 lots equivalent to 30,000 barrels of oil, the limit is 50 a day. Users with smaller orders are allowed 500 cancellations. That's different to international exchanges like the CME, which uses a ratio based on an investor's traded volume. So they're actually targeting spoofing. This is a matter we've talked about for many years. A lot of people who look at commodity markets in the West point to spoofing in many of the markets, including from the high-frequency traders.
Right. Well, spoofing is a way to defraud markets. And if China is a party that wants to get the U.S. defrauded, to defraud a China trader coming from China, they would use spoofing to defraud them and to steal their money. So China is saying, okay, we want to be in this market and we don't want to be defrauded anymore. We don't want to have our money stolen the way it's been stolen by the CME for years and years with impunity. So we're going to introduce our own contract, and we're going to bring integrity to that contract to do some anti-spoofing tweaks to the way that these contracts are traded. And that'll become probably a lot of very popular contract, because a lot of people don't want to have their money stolen by the CME. You know, that's a common thread.
Again, well, with markets, of course, blockchain technology could be used to remove a lot of this fraud rather than going through complicated regulatory measures. But Another thing that some people are concerned about in terms of this new Shanghai futures contract is that the Western markets are pretty much 24/7 in oil. But this particular contract, they won't be open 24/7. And also, what will happen during China's national holidays? Well, trading will stop for China's week-long national holidays, both the Spring Festival and Golden Week, leaving the Shanghai market out of sync with the Western exchanges. Shorter trading hours with just 3 slots each day, compared with almost 24 hours on Western exchanges, means that the market may sometimes play catch-up with the rest of the world. So there is a bit of an arbitrage and a weird, it seems like it might be more chaotic if they're competing. We see that in the Bitcoin market. Bitcoin is 24/7, and then you have currency markets and gold markets shut down over the weekend, and you see this huge catch-up, or you see ETFs or something like the gold, Barry Silbert's gold ETF, that on the weekends, if the price of Bitcoin falls by 15-20%, then somebody in GBTC can't sell until Monday morning.
Yeah, Barry's Bitcoin ETF. That's true. They're going to have to expand the hours of trading. I think they need to roll it out slowly. They're going to do it on a limited basis, and then they've got to go 24/7 for those very reasons. So within a year, they will be 24/7.
And before I know people will leave comments, it's not GBTC is not an ETF, but it's close to it. It's structured similar to it. But who will use the domestic industry? They ask in this article in Reuters. Well, China has opened more than 6,000 trading accounts, including the country's oil majors and about 150 brokerages. 10 foreign intermediaries have registered, including JP Morgan, Bands Financial, Straits Financial Services, and other Hong Kong-based affiliates of domestic brokerages. It will likely attract, however, mainly mom-and-pop speculative investors who dominate the country's other, often volatile commodity futures markets, from dates to iron ore, although transaction fees for crude are relatively higher. So they're predicting it's going to be the mom-and-pops speculating on this.
Well, they have enormous buying power, and they do affect prices on the margin. We know in Japan, for example, the Mrs. Watanabe, the housewife archetype, is the one who drives pricing in those markets in Forex. So here you've got an enormous population online traders who can, on the margins, move prices up and down. So this is an enormous population of many hundreds of millions of traders.
By the way, foreign investors can participate. You have to open a non-resident bank account. So if you want to compete with the mom-and-pop speculators in China, you're welcome to go there, apparently. But, they mentioned JP Morgan, and I want to turn to this headline. And it shows, again, I had just mentioned blockchain and what sort of transparency blockchain could introduce to these commodity markets, because JP Morgan has this massive silver position, and everybody's talking about it. But do they really have a massive silver position? We don't know. However, here's a headline from Zero Hedge, and it's regarding John Butler, who is a well-known commodities guy, and he's written many books and does a lot of research. Well, silver prices to surge. JP Morgan has acquired a massive quantity of physical silver. JP Morgan continues to accumulate the biggest stockpile of physical silver in history. JP Morgan now holds more than 133 million ounces, more than held by the Hunt brothers, according to John Butler. Silver hoard owned by JP Morgan has increased from 0 ounces in 2011 to 120 million ounces today. Money managers showing more optimism towards silver through record buying, near impossible to rule out an upside price surprise at any moment. This is from Marco Burns' Gold Core outfit, and they were posting on Zero Hedge.
Oh, so we need to get into this with some of the experts. David Morgan, he's a guy who would know. Yeah, I think we're going to talk to him in the second half, aren't we?
Yes, but I mean, this notion of whether or not these commodity markets and whether or not they could be rigged and whether or not they're going to drive prices or change fundamental outcomes or crash the dollar or all these sort of things, a lot of it has been disproven by the fact that we're 10 years into it and it didn't happen. We had Shanghai gold and futures markets, the silver and gold futures markets there. That hasn't seemingly changed anything. Silver and gold are still at the same price that they were when those launched in Shanghai. So whether or not this oil futures will change anything to the US dollar or the petrodollar, it remains to be seen.
Everyone loves a good story, though, and that's what separates us from the animals. As mentioned, when we come back, we'll be talking with David Morgan about silver. Don't go away. Welcome back to the Kaiser Report. I'm Max Kaiser. Time now to turn to David Morgan. He's in the Pacific Northwest. David Morgan of the MorganReport.com. David, welcome back to the Kaiser Report.
Well, Max, I can't tell you. I am to be back with you. Thank you.
Yeah, well, let's get into silver. Now, J.P. Morgan, our friend, our nemesis, J.P. Morgan, apparently they've got a whole lot of silver. That's what we're hearing, at least according to many headlines. Now, how much do they have according to this headline that we've been reading, and how much do they really have according to David Morgan?
Well, it's impossible to determine the absolute amount. What the facts show is that they have about 135 million ounces of silver currently. And that's basis the reporting requirements from the CME. So right now, as of today, JP Morgan has 5,122,000 ounces of silver in the registered category. The registered category is what they own outright at JP Morgan and can, move in and out at their will. They also have in their warehouse 133, I'll call it 134 million ounces of silver, which is in the eligible category, which is generally long-term investors that have trusted JP Morgan to hold their silver. So you cannot sell any of the eligible category until the owner of that silver signs the form, basically, that says, I want to sell my silver, put it on the market, sell it at this price or sell it at the market or whatever. So the total is 139 million ounces, 117,582 ounces of silver owned in the category of JP Morgan. But again, I wanted to find that most of that is in the eligible category, and most of us know that the eligible category is long-term investors and not necessarily owned by JP Morgan. Now, can JP Morgan have some silver in the eligible category? Yes, they can. But I think it's an inaccurate assumption to think that all of that silver is owned by them and no one is storing their silver in their facility. How much of it in the eligible category is theirs? It's hard to say. Most of us think very little, but it can't be proven one way or the other.
All right, so this falls under the heading of, are we at an inflection point in the price of silver? We've been covering silver for many years. It traded from 4 to 14 for many years. Now it's hanging on to that 16 to 18 range, which seems like an eternity. And you've got this JP Morgan news out there. Apparently they're buying silver. Also, the gold to silver ratio is 82. Which is historically very, very high. Is all of this adding up to a bullish case for silver? Are we about to break out of the doldrums, David Morgan?
I believe we are. If you look at the Kmecdj Traders Report, which most have been, have learned about how important the Kmecdj Traders Reports are, especially for gold and silver. And we are in a unique case, something I haven't seen since I've been looking at them for like 20 years or so, which is that silver basis the COT, the Kmecdj Traders, is at a level where there's basically nowhere to go but up. That does not mean that it couldn't go lower still, but we're basically in a net short position, which hasn't happened in this category since 2003, I believe. It's been like 13 years. So we are at an extremely well-positioned area for silver to move higher. Just because the Kmecdj Traders shows that it's at this level doesn't necessarily mean it's instantaneous. But the other fact is what you mentioned, Max, we're over 80 on the gold to silver ratio, which usually portends a closure of that, which means that silver starts to outperform gold. The gold COT is not nearly as bullish as the silver COT. Normally, they coincide pretty much, but at this point in time, that's not the case. So one of the best trades I think you could use at this time would be to do a spread, which means to short gold and go long silver. And all that means is not that you dislike gold, you just expect silver to outperform gold. It's a rather conservative trade. and it also requires less margin to perform a spread trade.
All right, fair enough. So now, we've been talking to you for a number of years, and the big bugaboo with talking about gold and silver is always the fact that the U.S. dollar has got tremendous support, and all U.S. dollar-denominated assets are supported. And you've got central banks around the world in on the game, and they love the dollar. They hate precious metals because they want to push the fiat currency and everything associated with it. However, now we've got in China launching an oil futures market priced in yuan. Many say this is the beginning of the petro-yuan and the end of the petrodollar. So this would pull possibly a leg out from underneath the dollar as world reserve currency. Is that a fair statement, or what are your thoughts on this, David?
I think it's a fair statement, Max. The only thing I'm a more probably considered a little older, doesn't make me any wiser, although I hope it would. I do think it will have an impact. I'm just not willing to state it's going to be immediate, but I think over time it definitely will cut into the dollar hegemony, the petrodollar over time. And what does that mean, David? I would guess, 6 months to a year. Could be instantly or very soon. We've only had 1 day of trading. I've read several articles about it. Certainly the trading was robust on WTI. Using the yuan, there was a arbitrage opportunity, which is interesting right from the get-go. So I do think it will have something. The tie to gold, that's a little bit of a stretch. I did an interview with Alistair McLeod from Gold Money, and we're friends. I can see that there's a possibility to make 2 trades, but it isn't tied directly to gold, although those that trade in that parameter in this new yuan-based petrodollar or petro contract could, if they elected to, move into another contract, gold back, but it isn't tied directly.
Right. So China launched a gold futures priced in yuan a year ago or 2 years ago, and has this had any impact?
No, it hasn't yet, really. I mean, anytime you take, physical gold from the overall supply, does it have an effect? And, well, truthfully, yes. I mean, it moved from one hand to another hand. But really, did it affect the price or affect the price substantially? And the answer to that is basically no. China and Russia particularly have been accumulating gold for years. As the GATA guys like to say, that there's been given this gift with the derivatives market getting the price at a level that they just keep buying and buying and buying. So as far as a shift of physical is concerned, it's been massive. It's been an accumulation for years and years. That cannot be discounted. And if you go to a gold backing, in other words, how much currency is out there versus how much gold is held by a nation state, Russia has the best ratio. So I think it's very important from that perspective or from a fundamental perspective. But as far as does it, affect the price, the answer is they're too smart to let it affect the price at this point in time. That's my view. They're taking advantage, as Gata says, of what the derivatives market gives them as far as a price finding mechanism.
Right, you make a good point there. Russia's been accumulating gold, China's been accumulating gold, the precious metals, and as far as precious metals as a percentage of their reserves and GDP, they're pretty well positioned going forward. We're in an environment where there's a lot of rhetoric, a lot of heated rhetoric, some call it Cold War 2.0. And is this type of environment tend to favor gold and silver, David?
Absolutely. I mean, the whole system is, as we both know, Max, a con game. It's a confidence game. And that's the problem, because once confidence is lost, then things can break apart rather rapidly. So right now, the BRICS, Brazil, Russia, India, China, and South Africa have formed years ago the Asian Infrastructure Investment Bank. They've moved out of the SWIFT system. So they've positioned themselves to basically isolate themselves financially from a dollar collapse. Now, whether or not that would hold or not, I would say remains to be determined. But obviously, the effort has been made. And again, to repeat, they continue to buy the one thing that's been trusted for thousands of years, and that's gold. So if you look at it as objectively as I possibly can, it speaks volumes. And why would these central banks in these, in the BRICS want so much gold? I mean, it's pretty obvious they don't trust the dollar. So I think it's a continuation. And when is the breaking point? I mean, it remains to be determined, but I think we're ever closer, especially with this, the petro situation that we just talked about.
All right, and the big competitor for the precious metal buck over the past few years, of course, has been cryptocurrency and Bitcoin. Had a huge run-up in 2017, now big pullback in 2018. Do you think there's going to be a rotation now from those who are looking for sound money, an alternative to the U.S. dollar, would rotate out of cryptos and into precious metals, and particularly into silver, because silver seems to be uniquely undervalued at this stage, David?
Well, anecdotally, certainly I like to say one day doesn't make a market, but I met a young man at the Anarchapulco conference where I spoke, and I had suggested on one of the interviews that it'd be a good time perhaps to take some Bitcoin profit and move it into silver. He did it when Bitcoin was at 17,000. So he was pretty happy at that point in time. I think the next phase could be, again, this is my bias, where you start to see what we're already seeing, which means more and more cryptocurrencies that are backed by gold or silver or both. And you're seeing more in those. So I think that could be the next leg of the cryptocurrency or the distributed ledger technology going forward. There's been a lot in the Bitcoin world, Ether, Litecoin, some of the better known ones that are probably the most legitimate. And there's been probably, I don't know, a large number that have been basically what's in it for me only type of things. It's a great technology. I'm not against the blockchain. I am a little skeptical of what the true anonymity of it is, and also what is the long-term availability, meaning, and I'll digress here a moment, Max, but I was at the Silver Summit in San Francisco, November of last year. It was myself, Doug Casey, Adrian Day, and a couple other presenters, and we're asked 10 years out, if you could buy one asset, Bitcoin or gold, what would you buy? And all of us answered gold.
All right. Well, you know, it's attracted a lot of interesting heavyweights like Ron Paul in the Bitcoin space. I was at the gym recently, and one TV they had an IRA for silver, and on another TV was Ron Paul.
And this is KMEC, KMEC-LP 105.1 FM, Ukiah, Mendocino Environmental Center, and we are trying to see if we can have our friend Ed Nieves.
Now I'm using computer audio.
What's that? Hold on, let me hit pause on this.
Can you hear me?
Yeah, we got you quite clear. So,
can you hear me?
Yes, I can hear you. Can you hear me? I guess you can't.
1 2 1 2.
Okay, so we have you, but you don't have us.
1 2 1 2.
Okay, so
I'm calling you.
Okay. Well, I can hear you, but you can't hear me. Whoops. So,
all right.
So I can hear you, but you can't hear me.
I couldn't hear you, and I don't know how much that has to do with my individual,
right.
computer.
Okay, so I'm going to do one more thing. We're going to shut that off, and if you could go to Kmecdj radio live stream while you leave this particular program
You're breaking
on.
up, man.
Kmecdj radio live stream. And that should bring up the YouTube page.
KMEC-LP 105.1 FM, Ukiah, Mendocino Environmental
All right,
Center.
let's see now.
Also on the web at kmecradio.org. Keeping Mendocino environmentally conscious. KMEC Radio.
Oh, you're still there.
Yeah, I'm still here.
Behind the screen.
Yeah, so, well, this is the live YouTube page. And you should be able to hear me on there. You may have just heard the station ID.
Yeah, I'm getting just garbled from your phone. I'm not hearing anything from the...
You may be getting feedback?
There you go, that's better.
Yeah, well, yeah, now I'm talking to you on the phone. So
right.
At this point, the issue is that you couldn't hear me.
Right, exactly.
Okay, so let me see if I can add an audio output capture. And speakers, we'll say OK. And now I have an audio output capture. So the question will be whether I can hear. Now I'm going to talk. Let me turn this on. Oh, that I am muted or you are muted?
Unmute. Go ahead and talk to me on the...
Okay, I'm going to talk to you on the computer. This is KMEC, KMEC-LP. We're speaking with Edwin Nieves, looking at Zoom, a new computer program that we're looking to webcast and interface with various folks as we do interviews around the country. And oops, let me turn this music down since I got that screaming out there. And we're just looking to see how we can get this all put together. So, yeah, go ahead.
Yeah, I can't hear you at all, man, from the...
You don't hear me at all from the program.
I hear you through the phone, but I don't hear you.
Okay.
Speakers, headphones are up. No, none of those things.
Okay, let me see if I hear myself on YouTube over here.
I could. Let me also hang on a second. Let me unplug my.
Okay, I'm going to pause that for a second. That was our YouTube stream page. And I'm going to talk for just a little bit in reference to the war machine and what are we going to do with waging peace. What does actually waging peace mean in the current situation that we have? And one of the things that we would like to see is that you cannot profit from killing people. I think that would be an incredible initiative to say that no longer are we going to allow the profit motive to dictate the American weapons war machine take pride in genocide kind of action that's been going on. And so it looks like I don't have our microphone, so what I'm going to do now is to check out what's going on with my mic, because it may be that I don't have it identified as I see real speakers. We'll say okay. Does that make any difference? Nope, that doesn't do anything there. So as you can tell, this is all a test, folks. We appreciate your patience with trying to get this all dialed in. And we're going to go to, let's try desktop audio. Well, let's try mic audio. Properties. And we're looking to find out, okay, there's microphone USB audio codec. So we're going to try that and see what happens. And at some point, we're hoping that we can get audio into our program. And we'll find out here shortly. Okay, once again, this is KMEC, KMEC-LP. So I guess I lost Ed. Are you still out there with me? Yeah, okay. Well, that looks like that's my problem at this point to deal with. So I appreciate you stepping up and giving me a little bit of your time. I got to figure that one out, and then we'll go from there with what's going on. But anyway, the video part looked okay. Yeah. So the idea being that we could have a live YouTube presence for anybody that wanted to make that happen. I'm thinking like John's show and things like that, where people are looking to have more of a footprint out there. Okay, bro. Thank you so much. We'll let you go. Bye. And you've been listening to KMEC-LP, trying to do some upgrades on our interface to our social media component. And we're going to hit discard on that. And so we do seem to be having a problem with getting our YouTube All right, so that seems to be working. We're out of here. KMECLP 105.1. We're going to end this meeting, and we'll know more later. Bye.